Why is that camera so foggy? Ooh, that made it worse. Holy cow. Made it worse. My camera. Much better. Something on the camera made it look, see, much better, much clearer. Way to go. Yates Pottery. Good evening. All right, let's go there. Oh, come on. There and there. Oops, no, there and there. And we are live. Ooh, Fanhine, that's good. Par M, Shell, good evening. Edward, hello. Econ, what's going on? Pressure, what's going on, dude? Hello. Okay, who do we have over here? Yates Pottery. Old Dog's in the house. Coach KJ, what's going on? All right. Hey, Mr. Jim Bibby, what's going on there, Mr. Jim? Samuel Diego, Dallas, what's going on? Jane Ann, a rubber band man. Dude, John Warner, good evening. Daniel's arriving tonight on a plane. I can see the red tail light. Heading for, look at me, two Daniel, no, one Daniel. Mark, Jess, good evening. Tony, James, Early, good. Coach J, all right, what's going on? Mario, good evening. Daniel, another Daniel over there. Geoman. Naz, what's going on? Metsman, good evening, Metsman. Rob, Theo. Florida girl, holy cow, is that you, Florida girl? I haven't seen you in months. Louis, what's your opinion on a minimum starting investment to see a great results in months? It's going to be strictly what you want. Florida gal, how you doing, kiddo? I'm in St. Petersburg now, kiddo. Yeah. You owe me a lunch, by the way. Bob, Brave, what's going on? Michael, Paul, Jimmy Neutron, what's going on? Bob and Kate, how's it going? Mr. Incredible, wow. Is it the Mr. Incredible or a different Mr. Oh, wait a minute. Mr. Wonderful, sorry. Getting them mixed up. Okay, Czar. Hey, would you rather watch a pear grow? Cool beans. Little chunky, what's going on? Not too much. Oh, you talk too much. Thank you there, Mr. Chunky. All right, a little chunky. Not quite sure why you'd say that. Good evening, James. I have Hertz, the average of 750. You know what? Let's jump in. We're going to take a look at Hertz first. Okay, first one, we're going to take a look at Hertz today. James A. Gaudino Jr. Cool beans. Peace. Bill Nye, the science guy. Thank you. Bruno, what's going on? Green, getting better. I'm getting better. Almost there. You're learning a lot. Great. With you and the people on the chat. Yeah, I'm wary of the people on the chat in this one. Some of those people are just weird. 901 Brewing. Don, what's happening, Don? Captain. All right, so anyway, that makes no sense that he said that. Bruno, I'm not quite sure what you mean by that. I don't see what we're looking at. All right, is what it is. Mason, thank you for that Mason. Yeah, I'm 61 years old. My dad said my hair would leave when I was in my 30s. Still got it, and I'm in my 60s. I got a lot more hair than most of the kids in my class, so I'm pretty much okay with what I got. All right, but you know what? Thanks for throwing salt on the wounds, buddy. Do you like to eat fruit? Absolutely. What are we learning today? Oh, today, Mr. Kong, we are going over and taking a look at investing in dividend stocks for a weekly cash flow for a simple, safe, predictable, consistent 1% per week. If you guys didn't know, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Created for my 9-year-old back in 2008 when she jumped on my lap and said, Daddy, what are you doing? Can you teach me? Well, most adults don't get it, so how am I supposed to teach a 9-year-old? Now, Jonas wants to know about gold. Gold is an awesome dust collector. That's all they're good for. You get a big fat bar of gold, you plop it on your desk, and boom, there it is. What do you expect from gold? You ain't going to get anything from gold other than the storage of wealth. It's kind of like a cup. If I have a cup and put some water in it, great. Well, that's a storage of my water. Gold is the same thing. It's a storage of your wealth. It doesn't do you anything. Hey, it's the dude that got paid 100 grand for breath implants. Yeah, prize. Thank you. He was telling you that you talk too much. Okay, thank you kindly. Yeah, Bronco, I got that one. A little chunky. Okay, Brentley. Good evening there, Mr. Brentley. All right, so we are QDTY. Ugh. Do you like that one? Ugh. All right, hold that tight. Oh, so you're agreeing with me that gold is nothing more than a dust collector? Would you? All right, I'm not going to do that. Alexis, grow up. Don't care. All right. Guten Abend. Can we see Chevron and Lockheed Martin? Bruno, we'll take a look at those in a minute. When in doubt, wants to take a look at QDTY. We'll take a look at that one also. But first on the list today is going to be over here. And that would be Hertz. Okay, so who is it over here? I can't really read that one. Mark. Okay, so Mark has Hertz at an average of 750. All right, well, let's pull it up. Now, first and foremost, let me go over a few of the rules. So hopefully you guys will, try to stay in between the lines. Do you remember back in elementary school, first grade, second grade, somebody gave you a box of crayons and say, hey, try to stay in the lines, because the picture with the lines kind of gives you an idea of what it's supposed to look like. So we're going to try to do the same thing. Elementary, please try to stay in the lines, okay? Now, what we're looking for is quality dividend stock companies. Now, we check every single week. There are literally 10,246 different companies that we can invest in at any moment in time in the U.S. stock market. Sorry for you guys in Canada. And wherever else you are. Okay, so I live here in the U.S. I invest in the U.S. Sorry. So that being said, we're looking for companies. Okay, now 10,246. I'm only looking for those that are you ready for this? Because I know I'm going to say it and someone is going to violate the rules, because they always do, because it's something to do. Hey, let's do something. Let's violate the rules. Let's do what we're not supposed to. Okay, someone's going to do it. Number one, I want a company that is consistently profitable. At least 2 decades. Now, for those of you who don't know what a decade is, that's 10 years. So 2 of those is 20 years. Now, if you think that's too much to ask, the stock market has been around for over 400 years. So I don't think 20 years is that much to ask for a company to be consistently profitable, because there are a whole bunch of them. Yep, there are over 10,246. You can choose whatever you want. But what I want to look at, and a lot of the people that are signing in have been here every single night. Well, they want to look at those too, because it just makes sense. And that's something that's not really taught anymore. Okay? Common sense is not really taught. Why would you invest in a company that's not profitable? Well, you're probably thinking to yourself, I wouldn't do that. You want to bet? Most people here are buying stuff that they have no clue what it is. You have no clue on all of the, let's say, minor intricacies. Okay? Anyway, let's keep on moving on. First one we're going to take a look at is Hertz. HTZ. All right, so here we go. Now, I like things simple. Now, remember when I said I'm showing you a trading strategy that I created for my 9-year-old? 9, count them, 9-year-old. 9-year-old little girl said, Daddy, what are you doing? Can you teach me? So, the trading strategy, simple, safe, predictable, consistent, no way for her to lose. That's the criteria I had to create for her. Most adults don't get it. So let's see a trading strategy created for a 9-year-old and see how you guys do it. All right. Now, I have been using this strategy consistently for about 15 years because I was born in the 60s, brought up in the 70s and the 80s. Okay. We had a saying, a mantra, a code, a life. Uh-oh, there's not enough disk space. Uh-oh. Okay. Time for the new computer. So this was it. If it works, leave it alone. Isn't that simple? If it works, leave it alone. If it ain't broke, don't fix it. It sounds so logical, but why do people go against it? Why do people want to add stuff, take away stuff, make it more complicated? It boggles my mind. Now, as you see, I'm going to go over things, and it's always 1, 2, 3, 4, 5, 1, 2, 3, 4, 1, 2, 3, 4, 5, whatever it is. It's always step by step by step. It's a logical equation. A plus B equals C. 1 plus 2 equals 3. Same thing. Simplicity. Simple, safe, predictable, consistent, and no way to lose. We're going to touch on those in a little bit. So, 5 rules. So my 9-year-old daughter, you just can't let, willy-nilly, what are you going to do? Okay, 5 rules. Rule number 1. If it's not on the list, don't even bother looking at it. We'll go over the list in a little bit. It's not that difficult. Rule number 2. Never sell at a loss. It defeats the purpose of the whole game. Rule number 3. Make sure the company is consistently profitable. I like 2 decades. So that's what we're going to stick to. 2 decades of consistent profitability. Rule number 4, weekly, listen closely, weekly options only. If the stock doesn't have weekly options, and if it doesn't have dividends, don't even bother with it. For me, if you want to invest it, fine, but please, let's not waste other people's time. I'm here until 11 o'clock. I really don't care. I will take a look at whatever piece of garbage you want me to take a look at, and I will give you my honest opinion. I will not sugarcoat it. I will not take into consideration your fragile little feelings. Terribly sorry. There's no safe spaces here. If you do something stupid, I'm going to say, what the hell are you thinking? Sometimes you need to be slapped in the face and, hey, wake up. Rule number 5, make sure the numbers work. Now, we're actually going to do a couple of sample trades so you can see how simple and easy it is. So let's progress forward with number 1 for the evening. Okay? Now, also remember, I will try to get to every single question. I have nine platforms. That means 9 different channels. So anywhere between 5 and 25, 30,000 people come through every night. If you want to talk to me, send me your phone number. I will personally call you. I don't do the texting. I don't do Instagram. I don't do that what do you call it? WhatsApp, Snapchat, Telegram. I don't do any of that stuff. And you will get an email, a text, a Snapchat, or something from someone saying that it's me and I have a great deal for you. Well, I'm telling you right here, right now, I don't do that. Plain and simple. If you think that I am secretly messaging you for a deal only for you specifically, that ain't me. I'm telling you here and now, I don't do that. You want to talk, have a conversation, great. I can guarantee you one thing. If I call you, I guarantee you I will not try to sell you anything. Okay? And I'm not going to try to sell anything at the end of the night. I'm going to show you a bunch of stuff. And yeah, I got a bunch of sell. We're all adults. We know how it works. Okay? In the bio, the link to all the crap I get to sell. Fine. I'm not going to try to sell you anything. I'm not going to ask permission. Hey, you mind if I send you a pitch? No, I'm not going to do it. Not once will you hear anything from me saying, hey, I got this great thing for you to buy. Send me. No, you won't hear me saying that. Ever, ever, ever. I have over 1,100 videos. Most of them don't have any sales on them. Every once in a while, somebody will ask me, like last year, somebody asked me something, and I said, yeah, well, this is what the price is. This is what it costs. I did that once or twice last year. I haven't done it all this year. I'm not trying to sell you anything. Okay, it's always 1 plus 2 equals 3. So let's go through it, and let's see how a strategy created for a 9-year-old makes an average of 1% per week, simply, safely, predictably, and consistently. I like the Lees, the Lee family. The Lee family, come on down. You're the next contestant on The Price is Right. Okay, so firstly, I got to fix that. Hold that thought. Got to fix it. Doesn't look quite right. Going to need the glasses because I can't see all the way over there. So, got to make the screen a little bit different. There it is. Right there. Thank you. Come on. No. Can't make it too small. You can't move it. Here we go. All right, here it is. Here it is. Here it is. Here it is. Right there. You are here and warm, but I could look away and you'd be gone. There we go. All right, so Hertz, first and foremost, you're going to see me doing things over and over and over and over again. If you actually look at some of my videos from a long time ago, you'll say, damn, this guy's saying the exact same thing. Yeah, it's the exact same thing over and over and over and over again. I don't do anything new and interesting. It's actually freaking boring. I don't even know why you're here. It's boring, it's slow, it's monotonous, but it's safe and it's predictable. 10 minutes a day, 1% a week. 1% a week, 10 minutes a day, that is 50% a year or more. If that's okay, fine. Let's see what we got. Ask whatever questions you want. I will try to honestly answer every question if it's out of bounds. And please, YouTube is notorious for the stupid questions. Please, I'm looking for a moderator on YouTube to help get rid of the boneheads. And you know what the boneheads are. You know, when were you born? You know, how many kids you got? What's your net worth? You know, crap like that. If it has nothing to do with what we're talking about, please don't do it. Oh, no politics, no religion. Okay? You really don't want to hear what I say about anything. Trust me, you don't. Well, most of you don't want to hear what I have to say. All right, so let's do this one step at a time. Anytime I look at a stock, any stock, I really don't care who it is. I'm looking for 5 things and only 5 things. It takes me 2 to 3 seconds. It might take you 3 to 4 seconds. Now, you may think that's a bold statement, but let me explain. You ready? Here we go. 5 things. You ready? See how quickly you can see them. You ready? 1, high. 2, low. 3, where was it? 4, where is it? And 5, what's the direction? Sideways, up, down, up, down. How long did it take? High. Low. Where was it? Where is it? And what's the direction? Sideways, up, down, up, down. 3 to 4 seconds is all it takes. Now, if it passes that, you take one look. Yep, okay, let's go to the next step. That's it. 2 to 3, 4 seconds, whatever it is. Then go step number 2. Step number 2. Well, actually, it's not really step number 2. It's like step number 5 or 6. But we're going to get into all of them in a minute. Let's move this out of the way. Because step number 1 is choosing the stocks that you like out of that 10,246 different companies. So out of all those 10,246, pick which ones you like. Now, how you pick them says a lot about what kind of a person you are and what it is you're looking for. So what I'm looking for is 2 things and only 2 things. Okay, I'm 61 years old. I'm retired. I'm too young to collect Social Security. Even though Social Security ain't going to change my life any, because I've seen what they're offering me. It is what it is, you know. Maybe I should have, you know, a couple of years ago, maybe I should have flown down to Mexico and walked across the border. That way I can get $2,000, $3,000, $4,000 a month, and I can get a free phone, and I can get free lodging and free food. Yeah, I should have done that. Anyway, besides the point. Once we get past this, you know, 3 to 4 seconds, high, low, was, is, where's it going, blah, blah, blah. I want to take a look at the numbers. Remember I said rule 5, make sure the numbers work. The biggest number you're going to see on this whole screen is this number right there. That is the last traded number of the day. Well, let's go by it. So let's take a look at it. $6.32. Okay. Now, if I was going to buy it tomorrow morning at $6.32, well, what can I do with it? I do a trading strategy that's called Dividend Capturing 2.0. You probably don't understand it, but basically I'm going to do a covered call. If you don't understand what a covered call is, buy right, whatever you want to call it, there's literally hundreds of videos online that will teach you exactly what a covered call is. I'm buying the stock at a certain price. Well, I'm buying the stock, and then I'm selling it at a certain price by a certain date. Now, when I say I want weekly cash flow, and then remember I said rule 4, weekly options only, I want weekly cash flow. You have 2 opportunities to get weekly cash flow. 1, you can go to work for it. Oh, so it's just 3 things. Hold on. 1, you can go to work for it. 2, you can trade something that trades on a weekly basis. Weekly options. Or 3, I can sit in front of my computer, look at this thing all day looking for setups, opportunities to buy and sell. Day trading, yeah, no thank you. No thank you to the 2 of them. I want the one in the middle, you know. I want to trade weekly options. Buy a good quality dividend stocks from a company that's consistently profitable. Buy it at the current price, 632, and then I want to choose one of these. Now, one of these here is the predetermined price. Remember? Sell it at a predetermined price by a predetermined date. Okay, so if I'm buying it at 632, I want to sell it at 650 because 650 is the closest one. It goes 3, 354, 455, 556, 657, 758, blah, 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 blah. So the closest one of these to that price right there is the 650. Now, how much am I getting for that 650? And it's called a stock option. So what am I getting for that $6.50 stock option? Right here. See, 650 stock option right there. And it's selling for 40 cents. Now, you probably think, 40 cents? I'm sitting here for 40 cents? Hold on a second. Don't be so quick to judge. 40 cents of what? 40 cents per share. So if I get 100 shares, that's a 40 cents per share. That's, was that 40 bucks? Oh, big deal. Hold on. Don't be so quick to judge. If I'm buying the stock for $6.32 and I'm selling it for $6.50 and I'm picking up 40 cents per share. Well, 40 cents per share on a $6 stock. You have to take everything in context. 40 cents a share on a $6 stock. Now, for those of you who can't do that math in your head, let's get that calculator out right here.
1.5%.
Uh-oh, where is it? What? Come on. Where is my calculator? You've got to be kidding me. There it is. Calculator. Okay, so calculator right here. Now, let's do some math. For those of you who weren't paying attention to math class and paying more attention to the person next to you, or two people down, yeah, passing notes back and forth. Yeah, you know who you are. So let's do the math really quickly. You take the profit, 40 cents, and you divide it by the investment, $6.32. So let's do that. 40 cents divided by $6.32 comes to a grand total of 6.3%. Now, I know it doesn't sound like a lot to some of you, but 6.3% for 1 week. Okay, I'm looking to get 1% a week. 1% a week is 50% per year. This right here is offering 6%, 6.3, excuse me. So 6.3%, what does that mean? Well, if I get 6.3% this week, what if I can do that every week? I'm not saying that you can, because even I can't do that. I mean, yeah, I get 6, 7% once in a while. But multiply that by 52 because there are 52 weeks in a year. So it's 6.3, that's 329%. That is tripling your money in 1 year. Might be interesting. All right, so that's how you figure out the math. And it's always on, you got to remember context. Okay, yeah, 40 cents is not a lot of money. But depending on where you are, what stage of life you're in. Now, when I was in my 20s and 30s, maybe I had $5,000 or $10,000 invested. Well, $5,000 or $10,000, 40 cents, it's not going to buy a lot of shares. But at 61, I have money saved up from listen to this, 1973 was my first job. 1973. So I've been working for quite a while. So when you have been working for quite a while, $5 here, $10 there, 50 cents there, $3 there, $100 here, over time, when it comes time for you to retire, you're going to have a nest egg. How big is it? Who knows? Everyone's different. Okay, we have a couple hundred people here at this moment in time in just these couple of channels here. You all have a different amount. You know, some of you may have 20 grand. Some of you might have 200 grand. Some of you may have a couple of million. We are all different. Don't compare yourself to someone else. You are on your own journey. You only have to answer to yourself. Okay? I'm starting with the man in the mirror. Who's the man in the mirror? Well, that's me. I'm responsible for me and only me. Okay, whatever you guys do, that's up to you. So here's the thing, 40 cents per share. So at this point in my life, I'm not buying 5 or 6 shares. I'm buying 10 to 20,000 shares. So 40 cents per share times 20,000 shares, that's a huge difference. And 6%, that's huge for 1 week. In only 10 minutes. Remember that, 10 minutes. Every video you ever see me do is probably, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So now the numbers work great. Now I'm taking a little bit longer than it usually takes because it takes 3 to 4 seconds to figure this out. And then hypothetically, it should take you another 3 or 4 seconds to figure this out. Okay? So it's not that difficult to see the biggest number on the page. And that's right there. The biggest number on the page. It's there and it's there. Okay? 632. I'm buying it at 632 first thing in the morning. Okay? Now, if I'm selling it at 650, that's 40 cents. So 40 cents on a $6.50 stock, that's over 6%. That makes sense to me. Great. Now let's go to the next step. Okay? Chart look good. Numbers look good. Next step is to zoom in to the chart and look at the details. Because the overall picture, because you can go to a car deal if you're looking for a car. Hey, I'm looking for a car. What are we looking at? Well, let's go take a look. And you see a nice purple car. They say, nah, I don't like purple. You didn't even look at it. Because you made up your mind it didn't fit. I don't like purple. Well, here's a nice blue pickup truck. No, I don't want a pickup truck. Okay, here's a white SUV. Ooh, I like SUVs, and I like white. Great, now let's look a little bit deeper. So that's what we're doing. We're going to look a little bit deeper. We got the high, we got the low, where it was, where it is, and the major direction. Great, fine. Now, what is it telling me? Well, it's telling me a year ago we're down here, right around $4. And it's telling me the bottom of the year is right about here, 250. And it's also telling me the high of the year is right about here, a little over 9. All right? It's also telling me that right at this moment in time, we're at $6.32. It's also telling me right here, it's in a downward spiral. Looks like 1, 2, 3, 4, 5 days in a row coming down. So right off the bat, it's going to be a no. So overall, yes. Zoom in a little bit closer, it's going to be a no. All right, so zoom in. What do you think? Sideways. 1, 2, 3, 4, 5. 5 down days in a row. Now, it's not a good opportunity today, but here's the top right here. Here's the new bottom. What usually happens from a top down to a bottom? It's going to keep dropping and dropping and dropping and dropping until it is done dropping. What happens when it is done dropping? Turns around and goes back up again. So although it's not a contender for this week, it might be perfect next week after it finds the bottom, turns around and starts going back up again. So I like 2 days to the upside, and on the third day I'll jump in. So we got 2 days left, Thursday, Friday. So if both Thursday and Friday are both up days, then I might be jumping into Hertz on Monday. Third day to the upside. Okay? I want 2 days to the upside to tell me that it's done dropping. Now, this is my rule. You guys got to figure out what works for you. Works for me is 2 days to the upside, and on the third day, if it's still trending to the upside, I will jump in on the third day to the upside after a bottom, after a top. So you have your top here, profit taking, here's the bottom, great, turn around, go back up. So I'm going to write Hertz down for next week. Not this week. So let's go back to the question. It crashed at 6:33 today. There is a short interest of 50%. Should I call it a day and sell my position and limit my losses? Or stay hoping for a miracle? I feel it will still go down a lot more with earnings coming up. Now, I tell people the exact same thing over and over and over again. I don't know you very well. I mean, we have talked before. I cannot tell you what to do. I cannot tell you what is right for you. I also have Hertz. And I am a firm believer on my second rule. My second rule, rule number 2, never sell at a loss. It defeats the purpose. If you think of it this way, okay, think of it this way. Most people, before they're introduced to the craziness that my orbit, okay, before me, most people would buy the stock and just hold on for the dividends. Do you think Hertz is going to go bankrupt, go belly up, and disappear in the next couple of days? I can't tell you what to do. Okay, I have no idea what your risk factors or your risk tolerance is. But I can tell you what I'm going to do. Okay, you're there every morning, or you have access to my recording, so you see that I do have Hertz. I will not sell my Hertz. I don't care that it went down 5 days in a row. Honestly, don't care. What did you expect it to do? 2 things: go up, go down. That's all stocks do. They go up, they go down. That's it. If you're expecting the stock to come to your house, apologize, say, hey, I'm sorry we went down 5 days in a row. Let me make it up to you. I'll mow the lawn, trim the hedges, and take the dog for a walk. That ain't going to happen. Stocks go up, stocks go down. They're uncaring, they're unforgiving, and they don't really give a rat's ass about your feelings. They go up, they go down, that's it. Rule number 1, never ever buy something you don't want to hold on to for the rest of your life. Once you make that decision, stick to it. Number 2, never sell at a loss. Okay, I got Hertz too. Okay, mine's down also. As a matter of fact, I got a margin call today. Yay for me. That means enough of my stocks have gone to the wrong side that I have to cough up some more money or do some creative selling. Hey, it happens. Anyway, that being said, let's keep progressing forward. All right, so I'm not quite sure if that answered your question or not. I find it very hard to do a covered call strategy during earnings week. Why? Why does earnings week have anything to do with whether or not you're second guessing your decision? Okay, your decision when you buy a stock is, do I like this company? Am I willing to hold on to it long term? That should be your question rattling around in your head. Do I like this company? Am I okay with buying it? And once you buy it, once you own it, you look at it every day. Okay, what's it doing today? What did it do today? Well, today it went down. What did it do yesterday? It went down yesterday. Oh, great. At what point is it going to stop, turn around, go back up again? And when it does that, how far up is it going to go? We don't know what it's going to do next. Just because it looks like it's going to go down, all right, see this one right here? Here's the high right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days to the downside. What did it do after that? Look, it went up. It went up again and again and again and then it turns around and goes back up. Well, it went up only 2 days this time, then it came back down again. Okay, well, let's keep on going. How far? Okay, let's go back right to there. See, that's what it does. Down, up, 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 down. What is it going to do next? Think about it. What is it going to do next? Do you think that we're not going to use rental cars anymore? Do you think Hertz is going to go belly up? The first thing you should check before you even buy, is this company consistently profitable? Why did I buy it? Do I plan on holding on to it and collecting a dividend every 90 days and a premium every single week? All right, so let's keep on going. Brentley, thank you, thank you. All right, so what do we have here? Okay, we have somebody in the background making noise. D, what's going on there, Mr. D? All right, gotta mute that. All righty, chat. All right, so That being said, that's Hertz. I'm going to say no for this week for jumping into a new position. Now, what I'm going to do, because I do have it, is I'm going to wait, see what happens tomorrow. Now, tomorrow's opening, it's going to be either one or two. There is no third choice. Well, actually, there kind of is. Let me explain. The close for today, the closing price today was $6.32. So tomorrow morning at 9:30 a.m., the stock market's going to open. Three things. It's going to open higher, it's going to open lower, or it's going to open at the exact same place it closed today. At that point, that will tell me whether or not I want a dollar cost average. Well, dollar cost average is when the stocks drop. If you have the ability, you buy more to lower your dollar average. That makes it easier to sell, makes it easier to profit. Okay, so it's always a numbers game. 1, 2, 3. Okay, what's going to happen now? All right, so that's where I stand on Hertz. All right, next. What are we doing next? Somebody wanted to take a look at something. I forget what it was. Whoops. All right, what do we have over here? Lester, don't do that, please. Once is perfectly fine. Nicholas, how are you today? L. Ford, Lester, Danny, what's going on? Ray, Nick Talk, Hardy, Hadian, Big Daddy G, what's going on? Victor, how's it going? That one guy, 2.0. Kevin, what stock are we talking about? Kevin, we were just talking about Hertz, that salty stock skipper. Cool. Kevin, you're welcome. Ava, should I buy in tomorrow or wait till Monday? Ava, I have no idea what we're talking about. Okay, now Ava, I have 6 different screens in front of me, which means I have 6 sets of conversation. Mark, we'll take a look at RILY in a little bit. Okay, hold tight, Mark. So Ava, I got 6 different screens in front of me, and I'm going to apologize now. I may be good, but I'm not that good. I can't follow every single conversation with everybody. Okay, so Ava, if you want to elaborate on what you are thinking about, why not just buy and hold? RAM, because it just doesn't pay the same. So RAM, explain to me. I love it when people say this kind of stuff. Uh-oh. Okay, so RAM 1500 wants to know why not just buy and hold. So RAM, I'm going to say this slowly, see if you grasp it, okay? RAM, at 61 years old, I'm retired, which means I don't go to work, I don't punch a time clock, I don't get paid. I don't get paid, who pays my bills? Now, I grew up with a time where I don't pass my bills off to anybody else. I take responsibility for my own self. I pay my own bills. Thank you very much. So why not just buy and hold? Because by buying and holding, it gives me no cash flow. Do you got that? No cash flow. Okay, I don't know about you, but I have 1 or 2 bills that come due once a year. 1 or 2. The rest of them come due on a monthly basis, every single month. I got to pay for my food. I got to pay for my gas. I got to pay for my insurance. I got to pay for my entertainment. I got to pay for this, that, and the other thing every single week. Buying and holding does not give you cash flow. Okay, hopefully that answers that question. All right, salty stock skipper. Yes, it will eventually come back up, but whether it comes back up and cover how far it went down. Okay, so salty stock skipper, let me ask you this question, because this comes up often. It does. Okay, now, salty skipper, salty stock skipper. You're relatively new here. I'm really good with names. I would remember that name. Okay, so you're relatively new. So let me explain something to you, see if you grasp it. Okay. Now, when a company is profitable, they have 2 opportunities. Number 1, they take the profits and they put it back into the company for capital growth. That means the stocks go up over years, decades. That's a great strategy for younger people. The second company, they take the profits and they share it with their investors. Share the wealth. Be fruitful, you know. They share the wealth. They give out the profits in the shape of a dividend. Now, before I ever came along, or somebody similar to me, most people bought the stock based on the dividend that they collected every 90 days. So here's the question. Salty stock skipper, let's say, hypothetically, for sake of argument, to move the conversation along, let's say Hertz is paying out $1 dividend, $1 every 90 days, $1. Okay, great. Let's say, hypothetically speaking, I bought 1,000 shares at the high, $9. And you bought the shares, 1,000 shares, at the low, at $2.50. So I have 1,000 shares, you have 1,000 shares. Every 90 days, how much money are you getting? 1,000 shares, $1 per share, is $1,000. Does that have anything to do whatsoever of what you paid for it? Absolutely nothing. Now, I paid $9 per share, but I have 9,000 shares. I have 1,000 shares, same as you. So how much am I getting? $1 a share, 1,000 shares, I'm making $1,000. I'm making the exact same amount of money as you are. The only difference is you paid $250 and I paid $9. We're getting the exact same amount of money, $1,000 per quarter. $12,000, wait a minute, $4,000 a year. How much I paid is totally irrelevant, because if I refuse to sell for less than I paid for it, until the day I die, I will continue to collect whatever the dividend is times the 1,000 shares I have, regardless if I paid $2 for it or if I paid $9 for it. So the price of the stock, for argument's sake, is totally irrelevant. What is relevant is the company consistently profitable? Are they going to increase that dividend payment every single year? Yes, great. Let's buy it then. Now I own a stock. I'm getting 1,000 shares, whatever. I got 1,000 shares. I'm getting the dividend times 1,000. Great. But now I come along and say, you know what? This company has weekly options on it. Not only am I going to collect the dividend every 90 days, but every 7 days, I'm going to collect a premium. Now, a premium is a insurance policy perk. Basically, a covered call. I'm selling somebody the rights to buy it from me at a certain price by a certain date. That's all that means. Jeff. Thank you, Jeff. So, that being said, if this thing pays a premium every single week, I'm getting the dividend every 90 days, and I'm getting the premium every 7 days. All I'm doing is just bumping up the notch a little bit, turning up the heat, getting more money than you. So you're just collecting the dividend, I'm collecting the dividend, and I'm collecting the premium. We're both collecting $1 per share on 1,000 shares, both collecting $1,000 every 4 months, every 90 days. But you are not collecting this every single week. I am. Do you see the difference? We're making the exact same amount of money on the dividends that we're collecting. I have 1,000 at 9, you have 1,000 at 250. We're both bringing in 4,000 a year on the stock. Okay? Now, I'm selling these things every single week. So, that's the way I look at it. Does it make sense? Before you were introduced to this idea, this thought, basically you bought a stock to collect the dividend, to share in their profits. Or you buy stocks for looking for the capital appreciation, for it to go up higher and higher and higher. Whatever you do, fine. But if you're looking for capital appreciation here, you're in the wrong place. It's not what my focus is. I honestly don't care. Isn't that weird? I honestly don't care about the stock appreciation. My only concern is the company consistently profitable? Do they have weekly options? That's it. If they're consistently profitable for at least 2 decades, that's 20 years. That gives me a sense of warm fuzziness saying, hey, people in charge know what they're doing. That's it. Stocks go up, stocks go down. Stocks go up, stocks go down. That's all they do. I have a couple of goals. Rule number 1, never buy something you don't want to hold on to long term. Rule number 2, never sell a loss, defeats the purpose. If the company's consistently profitable, whether or not the stocks go up or down is totally irrelevant. Because if they're consistently profitable, they will give you more and more dividends every single year, after year, after year, after year, after year. Now, remember I told you the stock list? Okay? Remember I told you, if it's not on the list, don't buy it for my 9-year-old. So here we go. You ready? Stock list. Here we go. 5. 1. Dividend kings. Companies that have increased their dividends, their profits, for 5 decades or more. GPC, Genuine Parts Corporation, has increased their dividends to the shareholders for 7 decades. That's 70 years. That's longer than I've been alive. A company consistently doing the same thing over and over and over and over again. ED, Consolidated Edison, dividends, 200 years. Pick a good company. There's 10,246. I can't help it if you pick losers. I can't. List number 2, dividend aristocrats. 25 years, a quarter of a century of increased profits. Dividend champions. The rules are a little bit different, but still 25 years of increased profits. Dividend contenders, 10 to 24 years of increased profits. And for the fun of it, let's throw on Warren Buffett's list because we all know who he is and we all say, hey, good for Warren. Yeah, let's do that. Ain't no way, bro. Christopher, thank you kindly. I love negative people. Thank you, thank you, thank you. You're the first turd of the night. Thank you for showing up. So, if it makes sense, why would you put your money into a company that's not profitable? If you bought Hertz and you like Hertz and you're willing to hold on to it until the day you die, pass it along to your children, collect that dividend every 90 days, well, now you can bump up the volume a little bit by collecting spare change. Call it spare change, call it whatever you like. The stock is $6.32. The $6.50 option is going for 40 cents a share. That's 6% this week alone. 6% this week alone. If you get 6% every single week, that's over 300% a year. And you still get to collect the dividends. Did I forget to mention that? Okay, so question number 1. Does it make sense? Question number 2. Do I like this company? Question number 3. Am I willing to buy this company, hold on to it the day I die? Question number 4. Will I write a covered call every week? Pick up a little bit here, a little bit there. Now, you may think 1% is not a lot, and it ain't. But here's the thing. When you get to my age, in 30, 40, 50, 60 years of work has accumulated to $100,000, $200,000, $300,000. Okay? $100,000 account will give me $1,000 a week. 10 minutes a day is 50 minutes. Let's call it an hour. Okay, you can turn the computer on, sign in, blah, blah, blah. 10 minutes a day, 1 hour a week, $1,000 an hour. That's a little bit different now, isn't it? So let's keep thinking context. And again, what's happening? Robbie, what's happening, Robbie? Good evening. No, I was just surprised. I wasn't trying to hate. I love your content. Thank you, Christopher. All righty. Chris, you got any questions? Throw them at me. All right. Now, I'm going to apologize now. I got 9 other channels going, so I'll get to you as best I can. All right. So what do we have over here? Okay, Mark wants to take a look at RILY. Is it too volatile in your opinion? Okay, so here's the thing, Mark. I actually have RILY. I have it at 295. So this is the exact opposite we were talking a little while ago. So let's pull up RILY and see what RILY's doing. Now, more than likely, I'm not going to own RILY at the end of the week. I mean, next week. And here's why. Okay. Here's RILY. Are you ready? High, low, where was it? Where is it? Look at the motion. Down, sideways, and then up. That's it. Simple. Great. Let's look at the numbers. 531. The 550s are going for 36 cents. Now, I don't know if you can do the math on top of your head, but 35 cents on a $5 stock is 7%. 7%. We just looked at one at 6%. This one's going for 7%. But hold tight. Don't get too excited. Now, we like that, so let's take a look at the numbers. Need the glasses for that. A year ago was the high of the year. $20.49. So I'm going to do this one really slow to see if it sinks in with some of you. Okay? $20.49 a year ago. That's what the price of RILY was. The low of the year. Right there. The low of the year. Oh no, right here. Right there. There it is right there. The low of the year. $2.60. Oh, I got another one. Woohoo! Hey, Jeff, thanks again. The low of the year, $2.67. Now, I'm going to say that again so wrap your head around it. You ready? The high of the year was $21. The low of the year was $2.67. What is that, a 90% drop? 90% drop. Yet I bought it. Because you're going to make most of your money in the stock market buying low and selling high. Buy low, sell high. Okay? So I bought at $2.95. So I'm in at $2.95. Look where it is now. Now, I have no problem keeping it and rolling it every week. Now, rolling it is part of a strategy, part of the dividend capturing. No. Part of the covered call strategy. Official. Okay, it doesn't give me a name, but just official. Yay! 4 roses, you're a couple shy of a dozen or half dozen. So anyway, I bought it $2.95 and I rolled it week after week after week after week after week because RILY kept giving me 2, 3, 4% every single week. So why the hell would I sell it? However, I'm at $2.95. Look at this jump. And then again. So I try to roll it forward this week and it's not giving me enough money. It's giving me 0.5% or 1/4%, or it's making me pay to roll it forward. Making me pay to hold on to it. Say, fuck that, let it go. Take my profit, and when profit taking hits, look, let's go to the last 30 days. This is the last 30 days. High, low, where was it? Where's it? Look at the motion. Up. Now it's coming back down again. So the high is right there. It went from $3 to $6.50. That's a 100% increase. 100% increase. Why not take your profits? Say thank you. Okay, so I'm taking my profits, and when she drops back down again, I'll jump back in again. What goes up must come down. Eventually, it will come down. Or it might not. Never know. But I made my profit. I've had it for 3 or 4 or 5 months. So every week I make 1, 2, 3%. So yeah, I held on to it because it kept giving me more and more money every week. So why the hell get rid of it? But this week it's not. It's not giving me enough incentive to keep it. I'm only looking for 20 cents because a $2.95 stock, 1% of $2.95 is 2 or 3 cents. But it's not giving me that. So let it go. Take the profits and move it on to something else. Okay? Because there's always something else going up. And there's always something else going down. Pick a good stock. Pick a bunch of good stocks. Now, out of the 10,246 or 43 different stocks there are, I only look at about 300 of them. That's it. I honestly really do. Who's this one? Starlingo. Woohoo! Okay. I honestly really don't care about 97% of everything in the stock market because it has nothing to do with me. You look at stuff that's not directly in line with what your goals are. Squirrel! Taking your eye, hold on a second. Taking your eyes off what you're doing is doing nothing but distracting you. How is this system working? Oh, Starling is working awesome for me. Oh, check this one out. Official. Woohoo! Oh, come on. Hey, Chasing Jack, how's it going? Once you take your eye off what it is you're doing, That's when you start making mistakes. That's when you start buying things that don't align with your goal. That's when you start losing money. Plain and simple. All right, so Mark, did that make sense? Okay, 30 days ago, we're down here below 3. Now we're up over 6. Every single week, 2%, 2%, 2%, 2%. Now it's not going to offer me anything. Let it go. I've already made my money off of it. Once it comes back down again, then I will jump into it again. I'm not taking it off my list. It's like, okay, it's just not in the right place. Right place, right time. Buy low, sell high. Low, sell high. Not buy high and hope it goes higher. Okay, you're going to say, as the night progresses, there'll be a bunch of you asking me, well, let's take a look at this. What's at the high? What the hell am I looking at it for? Let's keep progressing. Keep progressing. Okay, TikTok, what's happening? All right, what do we have over here? Ooh, Riven? Are you seriously? You want me to? Now, see, remember what I told you? Somebody is going to ask me to take a look at a piece of crap. And I'm going to tell you, it's a piece of crap, in my opinion. Ram, the reason why I'm saying Riven is a piece of crap is it doesn't have 20 years of consistent profitability. The company's not 20 years old. So how can it have 20 years of increased profits? Not sure he has all the answers. A margin call in a bull market suggests he's taking too much risk. Absolutely taking too much risk. That's exactly what it is. But here's the thing. I got a margin call in one account. I have 7. So some of them are a little bit more riskier than others. Okay, shoot, CVS. We'll take a look at that in a bit. Hold tight. Bruno, we are going to look at Chevron. Hold tight. Don't. Somebody asked, how is it working? Will Hertz go bankrupt? That I don't know. Oh, somebody wants to look at APLD. So let's take... Oh. C.T. Harris. What's your opinion on University of New Hampshire stock? Oh, let's take a look at it. UNH. University of New Hampshire. All right. All right, so UNH, what is that? Universal Healthcare or something like that? I forget the name of it. United Health Group. All right, UNH, United Health Group. I just like calling it University of New Hampshire because I come from the Boston area. UNH, University of New Hampshire. All right, high, low, where was it? Where is it? What does it look? Sideways, down, up, down, sideways, down. There you go. That's it. What do I think of it? Well, right here is the buying opportunity. So let's zoom in and let's take a look at it. But before we do that, let's change this up right here. Okay. Let's take a look at the numbers. Biggest number on the board, 266. I got to move this over so I can see those numbers. 265. $5.85. Hell yeah. The 267, 465. Hell yeah. 270, 350. Yep. 272, 277. Every single one of these options is giving me over 1%. Well, that's all I'm looking for is 1%. So let's take a look at everything else. Okay, zoom in a little bit closer. Are you ready? Here we go. A year ago, 574. A year ago, 574. We're at 260 at the moment. A year ago, 574. The high of the year, right there, 631. That was back in the beginning of November last year. Okay, that's the high right there. Okay, the low, well, that's right there. Here we go. Right here. Mid-May, the low of the year, 248. She dropped, went sideways. Here, look at this right here. Last 30 days. What does the last 30 days look like? Okay. High, low. Where was it? Where is it? What's the direction? Up, down. Big drop down. today is the bottom of the 30-day period. Not time to buy, but it is time to put on your list to keep an eye on it. Because, like I say, I'm looking for a bottom coming off of a high. Okay, here's your high. Here's your bottom today. 2 days to the upside. On the third day, if it is higher, I will jump into it if the numbers work. Well, the numbers do work. Okay, and if it's bouncing off of this bottom here after this gap down, well, there's a few other things you might want to take a look at, such as earnings per share, revenue per share, book value, profits, dividends. These things are important. Okay, UNH is not on my list, so I really can't tell you anything about it. But I am taking a look at the numbers, and that's what I would look for. Once a stock makes my list, I don't have to do any more research on it because it's on my list. UNH is not on my list. So if I was going to put it on my list, well, then I would go dive deeper into it. Are they consistently profitable? How long? How many years are they consistently profitable? What is the revenue coming in? What is the cash flow going out? What's their rates of return? You know, those kind of questions. But once you answer those questions, you never have to do it again. Because once you answer that question, it doesn't change. Because Coca-Cola has been making Coca-Cola for 140 years. 140 years. Do I really have to go in and say, all right, what are they doing? They're making Coca-Cola. They haven't changed anything. So why do I have to go back in and research them? Well, they have over 5 decades of increased profits. Why do I have to go back in and research them again? Once you research them, once they make your list, you never have to do that work again. Unless they drop their dividends and something happens in the company. Anytime a stock drops, especially what this thing did, okay, from 600 to 250, that I want answers to. 600 to 250, that is a 50% drop in what, maybe a month? I want answers to that. Once I get answers to that, well, am I keeping them on my list or am I tossing them off the list? There's 10,246 other companies. If something went wrong, okay, something went seriously wrong and now they get kicked off the Dividend Kings list or the Dividend Aristocrats list, well, I don't want to invest in them anymore. There's too many other companies that will take their place. All righty. Don't. All right. All right. Next question. Yeah, Michael, you're right. Dividend stocks is not for everybody. Which I find it rather strange. You saying that, yet you're still here. Oh, creamed corn, dividends. Why income over capital gains? All right, creamed corn. Let me see if I can say this really slowly. I'm going to say it really slowly, and I'm going to enunciate my words so you can understand the words that are coming out of my mouth and what they mean. Okay? Capital gains basically means I put a big fat chunk of money here, I water it, and I watch it grow. And then 5, 10, 15 years, I cash it in and spend the money. Well, are you suggesting that I go back to the workforce and get a job to pay my bills? Because the difference between capital growth and income is income, I get to lounge by the beach, sleep as long as I want, eat whatever I want to do, take a vacation whenever I feel like it. I've worked since 1973. My very first job, 1973, Old Man Simmons Farm. Very first job. Are you suggesting I go back to work? Oh, how about this? How about you pay my bills for me and I'll put all my money into capital growth stocks and just watch them as you're paying my bills. Unless you're willing to pay my bills for me, don't give me stupid advice like that. Okay? Why dividends? Why income over capital growth? Because I'm retired. My income's got to come from somewhere. We're the only species on this planet that's got to pay to live here. And how you want to live, well, great for you. I have a nice, comfortable life. I do. Comfortable life. I go see my kids whenever I want. I go see my grandkids whenever I want. I go down and mow my mother's lawn twice a week and hang out with my mom once in a while. I get the privilege of doing that because I put my dues in. I've been working since 1973. I have no idea how old you are, so if you can even wrap your head around that concept. But from 1973 to 2025, that's over 50, 55 years, something like that. Okay, so if you have something to say something that actually pushes the conversation forward. Something like that is totally useless and totally not even whatever. Bruno, what's happening? And Glorio, good evening, Glorio. Okay, so let's keep on looking at some of these questions. Hopefully we have better questions. Are you specifically interested in mature companies? I want young companies investing in themselves. Well, Cream Corn, I'm going to give you a little tidbit of advice. Are you ready? Go somewhere else. If you're looking at young companies that want to invest in themselves, you are in the wrong place. I said that right from the very beginning. Whether you're paying attention or not is irrelevant to me. Let me say it slower. I honestly don't care about capital growth. I don't care about capital growth. I have two concerns and only two. Consistency of profitability and preservation of my capital. If I get 1% every single week until the day I die, I'll die a happy man. That's it. 1% every single week for the rest of my life, great. That works for me. You don't agree with it? Fine. You don't have to be here. Nobody's twisting you around. Loading. Thoughts on IDCBY. What the hell is that? Nettie, Harley Davidson. We'll take a look at Harley Davidson in a second. Okay, so Ram, no, we're not going to do Ribbon. Shoot, CVS. Let's take a look at CVS. CVS. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up, down. Now she's going up. Look at this. That right there looks awesome. That does. So yeah, let's go to step number 2. And that is the big number on the board. The big number on the board is 62.30. Well, this doesn't have 50-cent increments. It goes 60, 61, 62, 63, 64, so on and so forth. So 62.30, the closest one is going to be the 62. Well, that's paying $2.56 a share. Now, here's one that throws people for a loop. Let's see if you catch this. Okay, let's see who catches this. You ready? If I buy it at $62.30 and then I sell it for $62, am I winning or am I losing? Who gets this one? Who? Think about it. I'm buying it for $62.30 and I'm selling it at $62. That's 30 cents less than what I paid for it. Am I losing money or am I making money? Who knows the answer to that question? Think about it. Let's take a look. If I buy it at $62.30, sell it at $62, I'm collecting $2.56. So in actuality, I am selling it for 62 plus 256, 64.56. So I'm buying it at 62.30 and selling it at 64.56. What does a stock have to do? Absolutely nothing. It's just got to stay above 62 between now and Friday. So think about that for a second. It's at 62.30. It just has to stay above 62 by next Friday. So this is going to be the first one we're going to do a sample on. Might want to take notes, see what it looks like, see what it sounds like. And then you're going to ask yourself that big, huge question. Does it make sense? Think about it. Does it make sense? If I buy it at 62.30, sell it at 62, less than what I paid for it, how can I walk away with more money if the stock doesn't move? That's a mind bender, isn't it? Let's go over it. Let's check it out. I'm not going to gatekeep anything. I'm going to show you exactly how to do it, exactly what it looks like, and then you have to ask yourself that question. Does it make sense? All right, so let's go take a look. All right, so we looked at the chart. We looked at the numbers. Now let's take a deeper dive into the chart. Need the glasses. Here we go. A year ago today, 62.74. Now, what's the purpose? I mean, think about it. Hold on. I got to stop for a second. A year ago, we're at 62.74. What are we at today? 62.30. A whole year has come and gone, and the stock's at the exact same place. Isn't that weird? Look at the opportunities you missed. If I bought it a year ago, 62.74. A year later, it's worth 62.30. Wouldn't you be a bit pissed? Just a bit. Think about it. A whole year's gone by. 62.70. Now it's at 62.30. Anyway, but look, see, down, up, down, up, down, up, down, up. Okay, that's what it did all year long. All right, let's keep on going. So a year ago, 62.74. The bottom of the year was in December, and that was 43.42, right down there. And then she shoots up. Here's the high right there, 72.50. 72.50, 72.51, sorry. 1st of May, 72.51, okay? High, low is, look at the direction. Up, down, up, down. Now she's going up. Look at this bottom here. Look at that right there. That's beautiful. All right, last 30 days. All right, so what do you think? Seriously, take a look at it. High, low, where was it? Where is it? Look at the motion. Down, up. What do you think? Seriously, you can't get any lower than the low of the 30-day period, and that was last week. Now it's going up, bouncing off after a 30-day top. 30-day top, drops down, now she's going back up again. Why? Profit taking. You get here, let's go back for a second, see if you catch it. Not a lot of people catch this. Let me go back just a tiny bit more. Right here. To there. What do you think? Look, high, low, where is it? 60 bucks, and it jumps up to 70 bucks. That's $10. Now, $10 on a $60 stock, what was that, like 17%? 17%. What do you think? If you bought something 30 days later, it's up 17%. Ask yourself the question, am I going to take my profits and run, say thank you, grab up my marbles and go on to the next sandbox? Hell yeah, I am. I'm telling you right up front, 1% is what I'm looking for. This is 30 days, 1, 2, 3, 4, 5 weeks. Hell yeah, 1%, 1%, 1%. Yeah, I would do that all day long. What happens after that? Well, profit taking, here you go. Now we're back down here, back down to the 59 area. That's pretty close to 60, right? That's where we were 60 days ago. It was at 60, she jumped up to 70, now she's back down to 60. What do you think is going to go next? Now, is that guaranteed? Nope, not guaranteed at all. There's only 3 guarantees in life. Okay? Death, taxes, and disappointment. Sorry to what do you call it, burst your bubble? Is what it is. But there's your profit taking right there. Here's the bottom, 3 days to the upside. Great, this is where I want to jump in. Hold that thought. I'm almost back to normal. I'd say I'm somewhere in the mid-90s. For those of you who don't know, those of you who are new here, I've been sick for the past week or so, and it's just taken me a while to get back to normal. Can you imagine that? This is not normal. Because imagine what normal is. People say I'm an acquired taste. Anyway, is what it is. Okay, so 62.30. So let's do this trade. Pay attention and see. Now, here's the good thing, in case you didn't know. This screen right here, that screen is live right now being recorded on YouTube. Okay, now I record every single session that I do. I have over 1,100 videos on YouTube. Unfortunately, they're all basically the exact same thing. Me standing in front of the computer, pointing out, opportunities to make money. Now, why am I doing it? A lot of people ask that question. Why are you doing that? Well, I'm creating a video diary for my children and my grandchildren because unlike some people, I'm not delusional thinking that I'm going to be around forever. So I want to take what I know and pass it along to my children and my grandchildren. Also, I'm going to be a big, huge dick about it because the inheritance in which I leave for my children and my grandchildren, they cannot have any of it until to the executor of the estate that they know how to invest money and they can be responsible for it. Also, they will each have access to X amount of dollars of that money, and they cannot take out any of that money. They can only spend 80% of the interest in which they create on a weekly basis. Okay, so if my children, grandchildren say, hey, let's do this thing, and they start losing money, guess what? They'll have no more of it until they can prove that they can do it. I'm a big, firm believer in I'm thinking of the right word. What's the right word? Compensation, that right? Performance-based compensation. So if you do a good job, you get paid. I had a manufacturing company for years. I didn't pay nobody, not a single person got paid hourly working for me. You got paid by performance. If you produce a product in which I can sell, you get paid for it. Now, 20 years ago, $30 an hour was a lot of money. That's the most I've ever paid anyone. This guy used to come work for me, and he says, you know what, can I work at night when nobody around? I said, sure. This guy would go through, now, you're probably not going to understand this, but this guy would go through a drum of resin, 55 gallons. I used to make artificial coral reefs. Some of you may have seen some of the work I've done. I have a video, me standing in front of one of my aquariums that I did. But this guy, he would just burn through all my supplies in one night. And I walk in the next day, and I said, dude, it's nothing for anyone to do. But I was okay with that because he was producing something that I could turn around and resell. So everybody who worked for me never got paid an hour. They got paid performance-based compensation. And I'm a big believer on that. Okay, I invest money for people. I don't take any. If I don't make you money, I don't get anything. That's it. But I do want a portion of the profits that I make for you. Anyway, the astrology of finance. Mango Man, what does that mean? I have no idea what that means. Oh, that's right. We're going to finish doing this. Remember, I told you we're going to show you exactly how to do it. So let's do one. You ready? Let's get out of this because we already decided we're going to do this at 62. So here we go. Now, one of the things I love about Thinkorswim, it's a trading platform owned by Charles Schwab. Now, I don't get any commission for it. I get no kickbacks. I get nothing for it. I just like the trading platform. I wrote a book 15 years ago, Choosing the Right Trading Platform. This is what I got out of it. Has everything in it that I wanted to do, and they haven't changed a thing in 20 years. I love that. If it ain't broke, don't fix it. I don't have to learn anything new. It's all the same. Okay, remember, so we're going to do it at 62? So this is what I like about it right here. If I click on this right there, that opens up a little window and shows me all the option strategies there are. Look at them all. I'm only going to show you one. Okay, I got to draw the line somewhere, and here's the line. I'm going to give you for free the trading strategy, which I'm teaching you, and it's called the covered stock or covered call. There's literally hundreds of videos explaining how it works. So let's do one. Covered stock right there. Boom, it sets it all up for me. Right there, everything all done. Now, remember I told you the 62 right here, so let's click on the 62. All right, now the nice thing about this, see the cursor? The little tiny square underneath the cursor says buy. If I push it over to here, it now says sell. Okay, now I want to buy a covered call. 62 right there. Automatically fills it for me. Great. Now my responsibility is to enter how many I want. So in this example, we're going to do just one. Because we're all adults, we know if one's going to cost this much and I have this much money to spend, well, I can get 5 contracts. I can get 30 contracts. I can get 117 contracts. You know what's in your account. You know what you can do with. So just one makes it easy for everyone to wrap their heads around. One is the loneliest number. Now, I'm going to change it from a limit order to a market order. A lot of people heard the what do you call it? You hear it all the time. Never buy at the market order. I always buy at the market order. I sell at the limit order. I buy at the market order. Now, here's why. A market order put in before the market opens will fill automatically at 9:30 a.m. tomorrow morning. By 9:31 a.m., I've already made my money. I buy the stock, I sell the option, boom, boom, just like that before 9:31. That works for me. Do I really care if the stock goes up, stocks go down when I get filled? No, because doing it this way, the stock and the option are tied together. I already know what I'm going to make. Remember what I said? Simple, safe, predictable. I know exactly what my profit's going to be before I even enter the trade. Most people buy a stock and wait for it to go up and then calculate the profits. I do it the other way around. I calculate the profits first, Then I jump in. Now remember, this one, the stock doesn't have to move at all. I can say exactly where it is, and it can even go down, and I'll still make a money on it. Okay, let's check it out. You ready? Buy one covered call CVS 100. That means it has weekly options. That's what that means, 100. Okay, 8 August 25. That's just the date. 8 August 2025 is next Friday. That means this option trade is going to expire 3:59 p.m. Friday afternoon next Friday. Because at 4 p.m. you can't do anything. Options, by the way, options expire on Saturday, not Friday. But the market's not open, so effectively you can't do anything after 3:59. 62 call option against the stock at the market to open. No, I did not stutter. No, I did not repeat myself. To open means we're doing 2 trades. Stock, option. Stocks, New York. Options, Chicago. All right. Remember I said predictable, simple, safe, predictable. Maximum profit right there. It tells me exactly what my profit's going to be before I even do it. Now we're going to do this in 2 sections, okay? Because I need to explain it to you in a manner for you to understand completely. There's the maximum profit right there. See this right here? Break even stock price, $59.67. What does that mean? Well, that means if the stock is $59.67 come next Friday at 3:59 p.m., whatever it is over and above that is going to be a profit to the maximum profit of $232. And yes, I am missing out if this thing shoots to the moon. And let me repeat myself again. I honestly don't give a rat's ass. If the stock jumps up to $2,000, I don't care. My goal is simple, my goal is predictable, my goal is boring as hell. But it is safe and it's consistent. Terribly sorry, you have to make a choice. Okay? And don't give me that crap, well, can't I have both? Yeah, you can, just a lot more work. Anyway, so let's take a look. Maximum profit, $232.50. Now, you're not going to understand what the rate of return is going to be without the use of the calculator. So let's go check it out. Calculator, come here, come here, come here, come here. Ooh, got 2 of them. Here we go. Clear this. Bring it on over to here. Now, to find out your rate of return, same thing. You take the profit and you divide it by whatever the investment is. All right. The profit, $232. $232.50. And then we divide that by what my investment's going to be. Not what it cost me, what my investment is, because this is an investment in my future. Something I can get a cash return on a weekly basis. A cash producing asset, if you will. All right. So 232, when here, right here. Cost of the trade, including commissions and fees. $5,968. So let's divide it up. 5,968. Grand total of, you ready for this? 3.8%. 3.8% for 1 week. That's pretty damn good, isn't it? Because 3.8% per week, that's almost 200% for the year. That's doubling your money every 6 months. How often have you done that? Consistently. Remember that consistently part. All right, so second thing I want to show you is that number right there, cost of trade including commissions and fees. That's if it's an all cash account. Now, I always tell anybody just beginning, do not use margin until you understand the risks involved. Okay, remember I told you I had a margin call this morning because a couple of my stocks dropped? Yeah, well, to avoid margin calls, don't use margin. But here is what makes margin so attractive. Hold on a second. So 3.89% all cash. So let's see what it looks like using a margin account. Clear this. Same profit, $232.50. But now I'm going to divide it by buying power effect, $2,853. That's how much of my money, because the other half is margin, borrowed money. Never use borrowed money until you understand the risks involved. Borrowing money from someone and then trading it, that's risky. Well, I've been doing this for over 20 years, so to me, it's not really risky for me. So you just getting started, stay away from margin until you understand the risks involved. So let's do the math, see what it looks like. We're going to divide it by 2,853, and that comes to a grand total of 8.14% for 1 week. So it comes back to that same question. Do I like CVS? Does it make sense? Do I like CVS at this price? Does it make sense to me? Am I willing to do a covered call every week? Now, you don't have to do a covered call every week. You can collect the dividend every 90 days. The covered call is there. It's available. It is one of the simplest, safest trading strategies there is. It is so safe that you can do it in your IRA. Some trades you cannot do in your IRA, but the covered call you can. You can't do a covered call on margin in your IRA, but you can do a covered call in your IRA. So let's take a look at some more. I'm going to write CVS down for next week because it just sounds good. Okay. Next. Oh, don't need the glasses for the next. All right. Delete that. Let's go back to this. Let's go back to there. And let's move this over to there. And let's take a look at another one. Oh, Nettie wants to take a look at Harley Davidson. Ooh, I like me some Harley Davidson. Shoot wants to take a look at CV. What is CV? AT&T is just plain T. Okay? Okay, Shoot. T is AT&T. CV, I have no idea what CV is. Oh, B's chiming in way over here, saying that dividends are so slow. Yeah, they are. So isn't watching the grass grow. So isn't watching a tree grow. Okay? So a lot of things are slow in life, but it all depends on what is it that you're looking for. If you want fast, if you want it to shoot through the roof, you're in the wrong place, brother. You really are. Okay? Alexis, grow up, will you? Yoons, Morchid. Daddy, why haven't I made enough money at 18 to retire yet? Whatever. Bruno, thanks, you're welcome. Your volume is super low in the YouTube channel. Is it? Oh, let's click that and roll it that way. All right, it's that much better. All right, so Nettie wants to take a look at Harley Davidson. H-O-G. H-O-G. Oh, what is that? All right. High, low, where was it? Where is it? Look at the motion. Up, down, up, sideways. We're at 26.02 at the moment. I'm going to say no to this right off the top. Now, I love Harley Davidson. I really do. I had it last year. But this is why I'm saying no. This right here. Not the time to jump in. This has to settle out before you jump into that one. Because that jump like that, it makes no sense to jump into it today. You had what? 1, 2, 3, 4 days to the downside. And then today she gaps up and the volume, like, what was that, like 10 times? Why? What happened to Harley Davidson? I don't know. It's on my list. I don't have it. What good time frame for scalping gold? Okay, Eunice, I don't do gold. There's no consistency with gold, and they don't think gold has weekly options. Moisty. Hey now, Alex asked a thought-provoking question. We would like an answer. Okay. Alex asked a question. I gotta go, Alexis. Well, yeah, I ain't answering that question. That's freaking childish. I definitely need a moderator on YouTube. Some of that's just, I'm not even gonna do that, Moisty. That's childish. What good time frames? I don't do gold. All right, Mohammed Isaac said short NVIDIA. Yeah, you have fun with that one, brother. How dare you ignore my question? I'll cast a spell. Yeah, whatever. No sleep. WTF? Would you short Nvidia right now? Hell no. I don't short anything. TXO never heard of him. Slutty. Okay, my wife's boyfriend locked me. Oh my God. I'm not even gonna bother. See, I need a moderator YouTube over there. Those guys just get carried away. Now I feel bad for the people on YouTube that sincerely want to ask serious questions. I just don't have the time or desire to have to cipher through all the childish people there. All right, so loading wants to take a look at IDCBY. I have no idea what that is. IDCBY. Industrial complex, yeah, hell no. Okay, remember I said earlier, no dividends, no options, no thank you. There's no options on this company. Why am I looking at it? The astronomy of finance. All right, Prithapal Tour. How do you consider PASS? PASS. PASS. It's not showing up. No options. Sorry, pass is a pass. But when will, okay, when in doubt. When in doubt's not a question there. Can't help you. But when will it reach 650? Oh, I'm assuming you want me to tell you when Hertz is going to hit 650? Don't know. Bruno wants to take a look at Chevron and Lockheed Martin. All right, we'll take a look at that in a minute. Chris, if being a chartist works, how does it not get priced by other chartists? I honestly don't know what you mean by that. I'm going to sit down and answer some of these questions. Got a bunch of them. All right. Kevo, could you do 2 week expiration if you stagger them every other week? Yes, you can. Andy Mayers, how you doing? Ooh, Bob the Gambler wants to take a look at Comcast. CMCSA. Now, how can you go wrong with Comcast? 64 million customers? I mean, come on. Oh, no. Sorry. See how quick that was? Take a look at this. Here's your high right there. High, drop, retrace, big down. Okay? Drops, 1, 2, 3, 4, 5. Now, I love Comcast. I do. Okay? I'm going to put Comcast down for Monday because this baby's going to find the bottom soon. See that? It's going to find the bottom, turn around, go back up again. CMCSA. All right. Not this week, though. Okay. CT Harris. We already looked at University of New Hampshire. Jeff, thank you. Oh, Lake Run AutoZone. I can say no right now for AutoZone. AZO. I don't do stocks over $1,000, let alone 3,800. Yeah, and it's a monthly. Yeah, it's a double no. Dividend stocks is not for everybody. You're absolutely right, Michael. What do you think of Open? OPEN. Hell no. It was 50 cents a couple of weeks ago. If the stock was 50 cents a couple of weeks ago, how can it possibly have 2 decades of increased profits? Think about it. Mike Learn. Ooh, an insult and almost a question. Wait a minute. A request and an insult. That's what it is. A request and an insult. Okay, Mike, are you paying attention? All right. You ready, Mike? Mike, I have 7 accounts. 7. I share 3 of them publicly, which means I'm about to show you my trades right here. Let's go here. Let's go weekly trades right there. Come on, come on. That's 24. We don't want to see 2024. We want to see 2025. There we go. Trades, weekly trades, 2025. You ready, Mike? Mike Learn? Here we go. Weekly trades 2025. Account 1, account 2, account 3. Let's go all the way back to January. January was week number 1 of the year. All the way. Here we go. Bum, 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 bum. Mike, you ready? move that out of the way. Now, Mike, I'm kind of hoping you know something other than trying to be let me just say, difficult. Here's all the trades for the first week of January. Week 1, January 2025. Dates, timestamps. Okay, 1/2/25, 10/31/51. That means 10:31 in the morning with 51 seconds. That's the timestamp. Tells you what it is. 10 contracts, 32.50, and the profit was $1.58. $1.58. 10 contracts. My friend, that's $1,580. Just this one line. Just this one right here. $1,580. The next line. 10 contracts. Another $1,580. The next line, 16 contracts. I can do that one in my head. 16 times 148. Damn it. Okay, 16 contracts. That's 1,600 shares. Multiply $1.48. 2,368. So 1,580, 1,580, 2,368, and that's just the first 3 lines. They're all there, brother. Time-stamped and all. So, week number 1. Week 1, quarter 1, December 30th through January 3rd. Account 1, account 2, account 3. Account 3, $4,839, 4.23%. Riot, Halliburton, RILY, CVS, Foot Locker, Kohl's, US Steel, Walgreens. That's all of them right there. That, my friend, is $4,839, or also known as 4.23%. Week 1. 2,634, 1.82%. I like this one right here. 9,341 for 1 week. 6.19%. Now, I don't get 6% every week. I average 1% a week. Average 1.4 actually. But every single trade is available online only in 3 accounts. Week 2, 2.3, 1.7, 1.9. Wait a second. 1.8, 3.6, 4.8, 3.3, 2.0, 2.3, 3.5, 1.2, 3.8, blah, blah, blah. You want to take your time and read them yourself? They're all there. The link is in the bio. Go there. 2025 weekly trades. 3 accounts. I share every single trade. Every single one. Now, I do have a morning trading group where people watch over my shoulders as I do my trades. And they ask me questions. James, why'd you do that? Well, I did it because of this. Okay? So, yeah, I share them. You're new here, so I'm going to let it slide. Okay, Mr. Mike Learn. Mohammed, what do you got? I got somebody over here making noise. Who do we got? Who do we got? That would be, no name. I got to mute you, brother, because you got too much noise in the background. All right? Sorry about that. All right, so he's going. I like to buy low and sell high. Dakota Kid? Absolutely. What's good for everyone, then be cautious? Well, that just makes sense now, doesn't it? Mr. Big Steamin' John. Thank you there, Mr. Big Steamin' John. You officially make turd number 3 of the day. Thank you. I love turds. Mike Learn. Hey, Bernie, do you display your financial advisor's license on air? What gives you the idea? What is it about me that makes you think I'm a licensed financial advisor? I'm not. I'm just some random guy on YouTube. That's it. You're on YouTube. I'm just some random guy. I always tell people, don't listen to a damn word I say. Do your own research. Number 1 question I always ask everybody, does it make sense? Stop being so negative. Stop being so pessimistic and answer the question. Does it make sense? It either does or it doesn't. Second question I have for you. Have I asked you to buy anything? Have I asked anyone to buy anything? Have I asked anyone to send me any money? No, no, and no. You can say whatever you want. I really honestly don't care. Okay. So what about the oil and natural gas companies that have been key players throughout previous wars within the last 2 decades? Also, public and private defense contractors, genuinely curious. Okay, so oh, I can't read. How do you pronounce that name? I'm not even going to try to pronounce that name. What I'm going to tell you is what I'm looking for: consistency of profitability. All those companies you're talking about, are they consistently profitable? Do they have weekly options? That's it. If they're consistently profitable and they have weekly options, I will take a look at them. I will dive deep and I'll do whatever research I feel is necessary for me. I don't give advice. I don't tell people what to buy. I'm just sharing my experience and I'm creating a video log for my children and my grandchildren. I'm not giving advice. I don't need a license to say, hey guys, how are you doing? Hope you're all doing fine. Yep, it's 2025. I have no idea when you're looking. Because I look at videos of myself from 2011 and I say, oh, that's what was going on. Now that I know that I can look at videos in the future, what do I have to say to my future self and to my future kids? That's why I'm doing it. I'm not doing it for your favor. I'm not doing it for your benefit. I'm doing it for my benefit and for my children, my grandchildren. If you don't want to be here, don't be here. You don't have something nice to say? Don't say anything at all. Simple. If you have nothing positive to add to the conversation, stop being inconsiderate of other people's time. Because there are other people here that want to learn or want to listen to what I have to say. Because believe it or not, whether you like to admit it or not, I've actually helped a lot of people. Now, I'm not trying to sell anyone anything. Does it make sense? Ask me a question. If you have a good, solid question that will perpetuate the conversation forward in a productive manner, have at it. Other than that, I would appreciate it if you keep your comments to yourself. Thoughts on trading covered call ETFs? Love them. TSLY, MSTY, and NVDY. I don't do those myself because not one of those is consistently profitable for more than 2 decades. There are other companies that have performed better. As a matter of fact, if you look at all 3 of those, TSLY, MSTY, and VDY, to dissect them, what companies do these ETFs invest in? And then invest in those companies by themselves. Because if you look at the returns for all 3 of those companies, not a single one of them is more than 5 years old. And I don't do companies less than 5 years old. To me, it just doesn't make any sense. B, General Electric, GEV. Cool, we'll take a look at it. We will take a look at it. Okay, what else do we got here? What else do we got? Oh, I told Bruno we'd take a look at Chevron. Okay, so let's go take a look at Chevron. And I forget your name, but hopefully that satisfies your desire. They're all up there. You want to take a look? Be my guest. Get rid of that. CVS, CVX, Chevron. Ooh, you missed the boat on that one. Okay, take a look. Right there. Your last 30 days. 30-day low, 30-day high, up, down, up. What do you think is coming back down? Coming back down. So Chevron, although I do like it, it is on my list. I don't own any of it at this moment in time because I have my money in other stocks. But this is on my list. So I'm thinking 2 weeks from today, this will probably come back down again, and then it'll be ripe for the picking. So I'm going to write CVX, Chevron, 2 weeks from today. CVX. Alrighty. And you want to take a look at Lockheed Martin, LMT. No, same thing. Take a look. Okay. Sideways, big drop. She went 1-2 days to the upside, and it's just kind of fizzled out. So it's kind of like going sideways. No real rhyme or reason in it until she starts going back up again. Lockheed Martin's just like pause for me. Now, I don't tell people what to do. I don't tell people what to buy. You need to choose what is right for you. Okay, so let's keep on going. Let's keep on keeping on. IBM, I see the IBM over here. Okay, B wants to take a look at General Electric. I got to mute you guys over here because I'm hearing noise in the background. Mute. And that's it. Okay, good. All right, so that being said, General Electric, is that GE Aerospace? No, I don't buy at the high. Terribly sorry, that was quick. The next one was GEV. GEV. Hell no. Okay, I don't buy at the high. Now, didn't I say earlier I don't buy at the high? You buy low and you sell high? Yeah. All right, so anyway, IBM. IBM. Interesting. Now, I do have some IBM. This right here was my reasoning for buying IBM. So let's take a good look at it. High, low, where was it? Where's it? Look at the motion. Up, down, up, down, up, down. So what's going on here? Why did I jump in? Well, number one, it's IBM. They've been around for a long time. I grew up with IBM. So let's take a better look at it. Before we do, let's take a look at the numbers. Does it make sense? What's the biggest number on the board? 260.26. Oh, the 260. 260 going for 330. That's more than 1%. That's a yes. That's just that part of the equation. Now I want to go deeper dive into the chart. Is it the right time to buy? Because all stocks do. Up, down, up, down, up, down, up, down, up, down. Buy it when it's low. Sell it as it's going up. Let's keep on going. So a year ago was the bottom of the year. 182.10. The high of the year was just recently. Okay, the last 30 days. Okay, there's the high of the year. Okay, down, up, big drop. Here's the bottom. 1 day up, 2 days up, 3 days up. That's where I jumped in right there. So I do IBM right there, but today she pulled back a little bit. Now, do I care? Not really, because gaps have a tendency to fill, especially a gap with that much volume behind it. Okay, so eventually that gap will fill, eventually. But it's IBM. They got a nice dividend, and they have a weekly option. Every single week, I can bring money in against my IBM stock while I'm waiting for the dividend to be paid out. Next. So what else do we have here? Holy cow. It is 11:32, and I have over 100 entries. So let's take a look at them a little bit at a time. IBM already did that one. Ava, thank you for that, Ava. I'm going to take that as a compliment. Alex, thoughts on Figma? Many think it's going to end up like CRCL. Others think it's another trash rug plug. I never heard that expression before. Trash rug plug. Figma, F-I-G-M-A. Hell no. How's that for an answer? Hands down, my favorite person to watch. Thank you, B. UNH, we already looked at that one. Thank you, Greg. What's your YouTube channel? The 10-Minute Trader. You can go right up to the... See, you're on TikTok. So on the top left-hand corner, it says The 10-Minute Trader. Okay? You just follow the links. The links will take you right to the YouTube page. Who actually pays you the premiums you earn on the covered call? Ooh, that's a good question. You never know. Isn't that weird? Because when you buy and when you sell anything in the stock market, you only have one person and you can buy and sell two, and that is the market maker. Think of the stock market as a convenience store, the corner store. Circle K, 7-Eleven, Quick Stop, Quickie Mart, whatever it is. Everybody has a corner store, okay? Convenience store. The market maker is the owner of the store. Okay, he will buy a gallon of milk from the farmer, pay $3 a gallon. You can't buy it from the farmer. You got to buy it from the convenience store, and you're going to pay $3.50. So he buys it for $3, and he sells it to you for $3.50. He makes the spread, the difference between the two. So when you're buying stocks, when you're buying options, when you sell, anytime you do anything in the stock market, you have to go through the market maker. Okay? So who buys it from you? Nobody knows. You're selling it to the market maker. If the market maker is advertising it, see right here, bid, ask, bid, ask, bid, ask. Bid is how much you can sell it for. Ask is how much you can buy it for. You don't know who buys it and who ends up selling it. All right, Ava, or an AT&T at the moment. Hello, everyone. UNH. We're looking at UNH. Oh, Lord Detroit. I'm down 13% on Intel. What would you do? Well, I'm down on Intel also. So the question I would have for you, why did you buy it in the first place? You probably bought it because you thought it was a good company and you wanted to hold on to it. And they're probably going to give you a dividend every 90 days. You know what else you have the opportunity to do with Intel? INTC. Okay, look, Intel, the high, 31, way over there. The bottom, 18. So from 31 to 18, that's the difference between the high and the low. So where are we right now? Okay, here's your bottom. Shoots up, comes back. Shoots up, pulls back. Now we got 1, 2, 3, 3 down days in a row. So me personally, once this thing hits the bottom here, because eventually it will, because the low of the year is way over here at 17. We're not even near the low of the year yet. So once she turns around and starts going back up, well, then I'll think about dollar cost averaging. I won't sell it, but I'm into it, I believe, somewhere in the 20s, and now it's in the low 20s. So this week, I'm selling the 22s or the 2250s, depending on what happens tomorrow and Friday. Because next Friday, the 8th, the 22s, but the 2150s are going for 15, the 21s, see the 21s, they're going for 25. That's still over 1% of my purchase price. So as long as I have some income coming in is what I'm looking for. Now, just because the stock is down in price doesn't mean you're losing anything. You only lose when you agree. See, it's a conscious decision because you know what you paid for it. Once you make the conscious decision to sell it for less than you paid for it, you're agreeing to take the loss. Me? No, thank you. I have 7 accounts. I had 4 losses this year. 7 accounts. In each account, I probably trade 100, 200 contracts a week. Out of all of those, I've had 4 losses. That's it. I think that's pretty damn good. I'm a little unhappy with the 4 losses. I mean, last year I had 2 losses. All right. What else we have here? Lululemon. That's not 20 years old. Justin. Well, I just saw Justin's there. There we go. Justin. Should I hold SCNI? I have no idea what the hell that is. SCNI. I can't give you advice on that one. I have no idea because I wouldn't try it. I would not trade it because it doesn't have options. So you're asking me to give you an opinion on something I would never ever do. You just got in at 240. All right, I could be asking you why. Seriously, okay, let's go check this out. SCNI. We're waiting. Here it is. SCNI, $1.61. Okay, so I tell this is some of the, now I give some advice, but it's nothing detrimental. Okay? I always tell people never use real money until you perfect paper trading. I also say if you are going to invest, you need to have at your fingertips a financial resource site. I use Yahoo Finance. You can use whatever you want. I like Yahoo Finance. It's easy for me to navigate. I know where everything is. I've been using it for a while. I want to go here. Historical data. Historical data goes into the data stream. The high, the low, the open, the close, the range, the volume, all of that is recorded from the very beginning, the first time they ever sold anything. It's all there. That's what I want to see. Historical data. Here we go. Come on, come on. And here it is. Now, historical data on SCNI. Whoops. Come on. Here it is, right here. Okay? Historical prices. The date, opening, high, low, close, adjusted, and volume. Holy shit. 56 million? That's a lot. All right, anyway, let's zoom in a little bit closer. What I want to look at is right here. historical prices, dividends only. Now, the reason why I want to go straight to the dividend, I have no desire. I'm going to share a secret with you a lot of people don't know, which is kind of funny because I come on live and I tell every people this. I'm a lazy trader. Really, I am. I found something that works. I concentrate only on the information that is important. So the dividend is a portion of the company's profits that they give back to the investors. So if the dividends increase every single year, guess what? That means the company's making more and more money, because you cannot increase the dividends without increasing the profits. Plain and simple. You got two choices. You can read 20 years worth of quarterly reports and annual reports, or you can go straight to the dividend. Because if they pay a dividend and that dividend increases, you can't increase the dividend without increasing the profits. No dividends, no thank you. I can't give you advice, Justin, on something that I would never even touch. Because no dividends, they're not sharing their profits. This is pure speculation. You're buying something and you're hoping it goes to the roof. Yeah, sorry, don't do that one. For me. Okay? I wouldn't do it because it just doesn't make sense to me. Sorry. Shoot, PFE, that's Pfizer. I like Pfizer. It's on my list. PFE. Back to sitting down again. We got a lot of questions to go through. Pfizer is going to be a no. Okay? High, low, where was it? Where is it? Okay, down, sideways, down, up, down. Okay, it's in a downturn right now, which means last 30 days. Okay? 30 days ago, shoots up, pulls back, shoots up, pulls back. 1, 2, 3, 4. 4 down days in a row. I'm writing Pfizer down for next week because as soon as she finds a bottom, 23.81, the 24s are going for 42, just shy of 2%. I like Pfizer. And best time to buy Pfizer is at the bottom. Now, we don't know if today's the bottom because tomorrow could be lower. Could be. Tomorrow could be one day to the upside. I want two on the third day to the upside. That's when I'm jumping in. So I'm writing Pfizer down for next week. Wow, I got like 25 stocks we're looking at next week. All right. Please review CMG and Intel. Lord Detroit, we already did Intel. CMG. What the hell is that? No. Wasn't that quick? High, low, where was it? Is it? Look at up, down, big drop. Eventually, this is going to turn around and go back up again. But here's the thing. Chipotle doesn't have any dividends, so why am I looking at it? Hey, James, did a covered call on VFC, then realized there are no longer 8 king. Had to kick them. Ooh, alrighty then. Rocket Barber, how are you today? Alacran, what's happening? KMB, we have to look at it tomorrow. We're running out of time, and I have a whole bunch of questions to go through. Do you ever do poor man's covered calls? Yeah, I know what they are. Once in a while. I used to do them a lot, but then they kept biting me in the butt, so I just don't do them anymore because they're not as predictable. And they're not as consistent. All right, IONQ. We have to look at that tomorrow. We're getting past our time. Ooh, I'm done over here. So what do we have over here? Random dude off the street for the interruption. Do you diversify into precious metals? No. Oh. Habibi Gaming, cool beans. All right. I turned 28 in December, just trying to reach full potential. Okay. There's nothing wrong with that at all, what you're doing. I mean, hey, if it works for you, great. Was good. Thank you, Advanced Gaming. My big streaming John. I just use an algo to day trade. Good for you. Automated. Don't waste your time with anything this man says. Again, thank you, Big John. E.W. Edwards is getting scammed. Okay. Big streaming, I use dividends obviously not to live off of, but I do reinvest. Cool beans. Humad, oil and gas might just see one historical rally before crashing down. Okay. All right, cool. Just ask ChatGPT to write you an algo trading strategy. It'll give you the script. Cool beans. Mike, the stocks of companies who show 20 years of dividends do not recover very fast when prices fall. And that's only half of the equation. Okay? I'm not looking for them to recover. I'm looking for them to consistently give me a profit every week. All right. I've written 27 books. Cool. I've only written 14. Don't look for dividends consistency. Time has changed very fast. Yep. Thank you, Muhammad. He will take your number so he can sell you his day course. I can guarantee you 100% I will not. Now, Mike, I'm going to do you a favor. You don't want to leave. I'm just going to throw you off. There we go. Don't have something nice to say. Don't say anything at all. Of course, he's going to say he'll make you money. His big money-making strategy is you paying him. Wow. You know what? We have a record today. I have not had 5 negative people in a long time. Really. 5. What do we call them? Turds? No. Trolls is a good one. You don't have something nice to say, don't say anything at all. You don't like it? You don't agree with it? Fine. Nobody's forcing you to be here. Okay? The question I ask you is, does it work? I probably should ask you, do you have an open mind? Do you understand the concept of buying something and then selling it as a middleman? Can you do another screen for a good view in the TV? Hold on. Thank you for the free advice. You're welcome. Blah, blah, blah. All right. Mr. Berry, hi. Can you do another? Okay, we'll have to do it tomorrow because we're getting close to 11. Put 2 screen halves of your face and half your trading screen view for good look and thank you. All right, so Eunice, I have 9 channels going. 9. Okay, so I'm broadcasting on 9 different channels. Let me think. 1, 2, 3, 4, 5, 6, 7, 8. 8 of them is me standing in front of the screen, so you can actually see all my trading. 1 of them is just screen alone, with not me there. It gives you an ability to look at these small numbers. Okay? Technical analysis will be irrelevant at fast pace of time. Why seeing the previous patterns? It's not previous patterns. This is today. Okay? This right here is today. That's not the past. Well, it kind of is the past because it was early this afternoon. But it is what it is. You do whatever you do. Okay, seriously, I've been doing this for 15 years. I have no problem with it. Okay, how can I find best broker for working? You have to figure out what you want, what you're looking for. Mux Capital. Mike, sounds like you need to. Good. Mike, learn. You can just wait for back the way you can put the stop loss. Don't lose a lot of money. There you go. That works too. Could we look at Chevron tonight? Okay, Carl, we already looked at Chevron. Yones, 6.3% for 1 year. No, that trade that I show you was 6.3% for 1 week. I don't do anything for the year. I don't do anything for the month. I don't do anything for the quarter. Every single trade I do is weekly. 1 week at a time. Okay. You're welcome. Blah, blah, blah. James makes, all right, thank you, Bruno. Bruno, weekly time frame, absolutely. But what happens if the stock soars over the week? All right, Fox, listen closely. Because apparently you not understand when I say I honestly don't care if the stock goes up. I jump in, I get my percentage, my 1%, 2% sometimes. If the stock goes up, great. I'll take my money, thank you kindly, and I'll find something else to put it into next week. It's really not that difficult, and this is exactly what I mean when I say adults have a tendency to make this more complicated than it needs to be. All right. on third day upside he buys. Yep, thank you, Bruno. How can I find low and high from 1 year time frame or weekly time? Are you kidding me? Really? Right up here, right there, right there. 1 day, 1 year, 1 day, 1 minute, 5 days, 5 minutes, 5 days, 15 minutes, 10 days, 30 minutes, 20 days, 1 hour, 180 days every 4 hours, 3 years every week. You can set it for whatever you want. You can do whatever you want. Now, Thinkorswim has so much to it. I probably only know 2% of everything available on Thinkorswim. Why only 2%? Because everything else means nothing to me. It does not affect what I do. So why would I learn something that has absolutely nothing to do with what I'm doing? Bruno, basically the high point and the low point in 1 year, the option graphics, then you choose blah, blah, blah. Okay. Brian Cook, have you ever done a YouTube video reviewing your Thinkorswim setup options? Absolutely. 14, 15 years ago. All right, let's keep on. What do we have here? Choose 30 minutes, Bruno, blah, 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 blah. Yep. No, Mike, he never sell you a book. Yeah, I got a bunch of books. You want to buy it. Nope, I don't even give tips. I just read what you guys ask me to take a look at. Makes you learn some stuff. Analytics. Okay, thank you. Thank you, Bruno. Very nice. I like when people are nice and have something positive to contribute to the conversation. All right, so let's go jump on over to YouTube, TikTok and see what we have here. All right. Chasing Jack. You're on 5 today, James. Good for you. Thank you. Mr. Darrell, would you remove Dow from your list since they have halved their dividends? You know, Mr. Darrell, that is a very high probability. Okay. Now, anytime I remove a stock from my list, I need a good reason. So I want to take a look at, what was the reasoning. Was it a reasoning for a valid reason? Or did all the executives give themselves an increase, decrease the amount of money that they're giving to the workers, and still decrease? Then I will throw it off my list. If there's price cuts all over the board and there was a valid reason for them to cut it, I might think twice. What is the name of the book and how do I get it? Uh-oh. I've written 14 books. They're all available online. You're on TikTok. Top left corner brings you to my website. Okay, I promised early tonight I'm not going to try to sell anyone anything. Okay, so let's keep on going. Gabe, look up dividends irrelevance. Study buddies. Okay, thank you for that. That's the life. Thank you. Gabe, so defensive for no reason. Gabe, I'm not really defensive for no reason. I dislike stupidity. Okay? Sometimes, Gabe, people come out and just want to spew negativity because they're having a bad day. Well, why does someone's bad day have to share along with everyone else? You're having a bad day, fine. Keep it yourself. You have something, if you don't have anything nice to say, don't say anything at all. Why be negative? Why take attention away from all the other people here genuinely trying to learn? You don't have something nice to say? Don't say anything at all. Now, user 42291988, whatever. Johnson & Johnson. I love Johnson & Johnson. They've been in business for over 100 years. They are dividend king, which means they're consistently profitable. I don't buy them because of the premiums on the options aren't 1%. Very rarely are they. Lily, we already looked at IBM. Official under construction, winning, thank you. NVM, cool, losing, okay. Making money, Mercer, losing, okay, losing. All depends on the premium, thank you, Jack. What stock is this? Lily, I'm not quite sure. Oh, CVS, there you go, Big Bear AI, blah, 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 blah. What does CVS report or when? Earnings, I don't know. July 31st, thank you, KG. Yep, tomorrow. Should I go all in on ULTY? No, Jacob, I'm going to tell you what I tell everybody else when they ask me that question. I know absolutely nothing about you. It would be in ill faith for me to tell you anything. You want to have a conversation? Fine. Drop me your number. I'll give you a call. Okay? Simple. You want an honest question answered? I'll answer it for you. And unlike some people believe, I guarantee you 100%, you leave your number, I will call you personally, and I will not try to sell you anything. I have no need for your money. And no, TikTok does not pay me diddly squat. Terribly sorry to burst your bubble. Performance-based merit. Thank you, we the people. If it dips on earnings, it could be an opportunity. Absolutely. Nikki, how you doing? Kaylee, good evening. Gabriel, Bob, what's happening? Lego Nerd, cool name. Megan, how you doing? Becky Lee, how are you? Chad, what's happening, Chad? Dice Raw, okay. Jokester, back again. You were here before, unless someone else is using that name, because that name is familiar. Okay, influenced by music. Lululemon is not 20 years old. And I don't even think Lululemon has dividends, do they? Let's check it out. Does Lululemon have dividends? L-U-L-U. Lululemon. What's that? Mr. Dapo, cool beans. All right. Lululemon, there are no dividends in the selected time period. That means no. Can you explain how this debt bubble in the U.S. will get resolved? I'm not an economist. Terribly sorry. The way I look at it, this is the way my theory is. Okay? Something's going to happen. We don't know what it is. But remember, he makes weekly stock options. Thank you, Bruno. Something's going to happen. Now, I don't like politics. I don't want to talk about politics. But we all know it. We all know that life is not what it was 10, 15 years ago. We all know it. Something's going to happen. Don't know. But here's the thing. No matter what happens, okay, the economy can go all to shit. The stock market can go kaplooey, okay? However, what is never going to change is you, your aunts, your uncles, your brothers, your cousins, the kids you went to school with. You're all going to wake up in the morning. You're all going to go to work. Regardless of what happens. You're just going to pick yourself up. Okay, great. Someone's going to sweep the floor. Someone's going to dump the trash. Someone's going to turn the lights on. Life is going to continue regardless of what happens. We have had many recessions. We've had many pullbacks. Do you remember in 2008 when everybody thought the world was going to end because of the financial crisis? Well, guess what? People still went out to eat. See, I live down in St. Petersburg, God's waiting room. That's what it's called, God's waiting room. Even during the financial crisis, even during all that, even in, what were they called, the tech bubble back in the 2000s, people still went out to eat. People still went to Walmart and bought stuff. Farmers still got up the crack of dawn and plowed their fields. Somebody still went to the car wash to wash the cars. Somebody showed up at Burger King to flip the burgers. No matter what happens, if the economy goes to shit, you're still going to need toothpaste, toothbrushes, shampoo, conditioner, clothes, a place to live, electricity to run your whatever you're running. The world is still going to continue forward, even though everything looks like it's going to fall apart. So if I only buy companies that have weathered the storm, let's take a look at the last 100 years. World War I, World War II, Korea, Vietnam, Afghanistan, the desert crap over there, what's going on now. And then we also had, we also had the oil embargo in the 70s. We had the dot-com crash in 2000. We had the stock market crash in 29. We had the Great Depression. We've had the financial crisis of 2008. We've had the pandemic of 2021. And guess what? We're all still here. Walmart is still open. Okay? ExxonMobil is still pumping gas. Life is still going to go on regardless of what happens. So if I only invest in companies that have been around for 50 to 100 years, that have seen this crap before, do you think they're still going to be around? Do you think World War I, World War II, Korea, Vietnam, all that crap? Well, why didn't Pepsi and Coca-Cola stop making Pepsi and Coca-Cola? Why are they still making it? They were here 100 years ago. They've seen all that crap, yet they're still doing it. Why? Why is it that people get up and they feel they need to go to work? I'm 61 years old. I'm retired for 2 years. I still wake up in the morning and say, don't I have to do something today? Oh, wait a second. No, I don't. It takes a lot to get used to. I've been working since 1973. You get up in the morning and you go to work. That's what we do. We get up, we go to work. Okay, so that's my answer to this debt bubble crap. Yeah, it's all going to fall apart. It's all going to implode. But guess what? I can almost guarantee you, even if they got rid of the US dollar and they brought something else in, I can almost guarantee you they're still going to be making Coca-Cola and Pepsi and cars. And builders are still build houses. And the handyman is still going to come over to your house and fix your ceiling fan if it's not working. The world is still going to continue regardless of what the idiots on the big hill do. Don't get me started in politics. HXL, never heard of it. FIG, no idea who that is. Can you still get in on XRP? Yeah, why not? So you must be liking UNH. No, I don't like UNH. UPS, yeah. Okay. UPS, 7.52 dividend today. Cool beans. Well, we're past 11 o'clock. I'm just going to go over the answers, and that's going to be it. AFL, Aflac. Love the Aflac. Do you trade NDX? What the hell is NDX? Never heard of it. Never heard of NDX. NDX. NASDAQ. Okay. What the hell are you talking about? $23,000 this year? What is it about me that makes you think I'm going to spend $23,000? Look at the move from 17,000 to 23. No, I buy, I sell at 1 or 2% of an uptick. That is freaking huge. And it has daily options. Yeah, no. Sorry. I like predictability, simplicity. That's not predictable and that's not simple. And does NASDAQ actually have weekly options? It has daily options. But what do the dividends look like? Do they pay every single week? Okay. UPS lowest price in 10 years. All right, well, maybe we'll take a look at it tomorrow. LHXL. Oh, IHXL. Never heard of it. Glad no one answers. Drift, I have no idea what that means. Ticker BNS. What the heck is BNS? Bank Nova Scotia. No, I don't do monthlies. You see that? 15 August, 19 September, 19 December. These are months of the year, which means you can only trade that once a month. 12 to 24% a year? Yeah, no, thank you. Sweet Dan, how are you doing? MSTR and MSTY. Gavin, how are you tonight? Thank you for showing up. I don't do either one of those. I know it isn't your cup of tea, but wouldn't you want to take advantage of REITs that pay a good dividend? Milo, throw one at me. Let's take a look at it. Milo, throw one at me. Let me take a look at it. IONQ. Is not 20 years old and not a dividend stock. Thank you, Lily. But do they offer weekly options? Milo, do they offer weekly options? A lot of haters here. I know, isn't that weird? Tonight, I've had 5 haters. That's the most I've had in about 6 months. You know what? I was doing so good. It's like I went weeks and weeks and weeks with 0 haters. But tonight, 5 of them. Woo! And people hate for no reason whatsoever. People always hate on the internet. Just means they are losing money. Jesse, I love that one. Mike Sweeney, can you show us how you can close a covered calls tomorrow? Mike, why would I want to close my covered calls tomorrow? Oh, Hazen, where is my Bugatti? Now, what is it about me that makes you think I would have a Bugatti? Bugatti doesn't make pickup trucks or SUVs, not at least I know of. Do you make money on dividend payments or only option premiums? Okay, Y-Clip, 98% of the time it's always dividend premiums on the options. Very rarely do I collect dividends. I don't want to collect the dividends because if I'm collecting a dividend, that means the stock's going back down. Because stocks go up before the dividend is paid. Then once the dividend is paid, they have a tendency to go back down. Oh, why is this not charging? No! All right, that one's not charging. I gotta plug that one back in. There we go. Now she's charging. Where's my Bugatti? Really? Why the hell would I want one of those damn things? Amica, Microsoft. Ooh, I like Microsoft. Meta, I don't like. Now, Meta, also known as Facebook, has only recently started paying dividends. What are we into year number 3 for the dividends for Meta? Yeah, no. Just turned 18 and put $3,000 in my brokerage. What's the move? Ooh, Fernwen, how are you today? Number 1, congratulations. That's a good step. Number 2, what do you want to do? You got 18. You're 18. You got a long way to go, brother. You got to pay your dues. All right, Rod, what's happening? Let's keep on keeping on. Ray. Long-term hold and sell Lockheed Martin. Okay. High Street Pink. RV, I spew negativity on my good days, so my karma stays balanced. Ray, Lockheed Martin. We've already looked at it today. Nick, where am I located? St. Petersburg. Okay, Sebastian, we already looked at UNH. Music Spot, back again. Mr. Dividend, this is off topic. I know, blasphemous, not a dividend stock. Figma, IPO, nay or yay. Okay, Music Spot, we've had this conversation before. I don't do IPOs. If the company doesn't have 2 decades, that's 20 years of consistent profits, it's just going to take my eye off of my goal, and it's just wasting my time. James, when I sell a put, why does it show negative numbers? Well, because when you sell something, it means negative. It means you're selling something. When you buy something, it's a positive. So it's a positive. It's like if I buy 10 contracts, it's plus 10. If I sell 10 contracts, it's negative 10. So that's time you sell something, it's a negative number. Dirty Hands. You ever get done playing a video game and think, shit, that was a waste of time? Yes. Dirty Hands, let me ask you a question. Do you know the game Myst? I think it's MYST. I think that's the last game I played, and that must have been at least 25 years ago. Okay, me, my best friend, and my wife at the time, we were playing the game. And we were playing and playing, and we played that thing for like 6, 7, 8 hours. Okay, when we finally got killed, we looked at the time and we all looked at each other and said, holy fuck, there goes half of our day. Yeah, so I don't play video games anymore. Sorry. James, cause you lost money. No. I told you, Music Spot, I lost 4 positions. 4 losses this year. Lily, Virginia or Florida? Florida. FL Hockey, thank you. Lily. Cold War, nope, never played that one. Black Monday, never played that one. How you pay for things will change. How you earn money might change too. Lily, I'm going to agree with you, but here's the thing. Some of you may or may not remember when Europe got rid of all the different currencies and went to the euro. Remember that? All the euro, remember that when it came in? Okay. Now, there was one country who said, oh, hell no, we're not giving up our currency. That was Great Britain, England. They still have the pound, the penny, the pence, blah, blah, blah. They refused to do the euro. So we as Americans, we could if we wanted to, refuse to give up our dollar. We could. Aflac. Ooh, I love Aflac. It's on my list. How can you say how you lost so we know how to avoid losing? Oh, good question. Number one, remember I told you most people lose by hitting the wrong button. I lost $2,500 this year because I hit the wrong damn button. Seriously. There's how many buttons on the damn keyboard? 100, 200 maybe? Okay, if you hit a wrong button, yeah, you could lose money. Yeah, I did. Okay? Another time is, let me think. Somebody did something that was so unexpected, it blew my mind. Okay, I was doing one of those poor man's covered calls. Okay, somebody asked me about that earlier. I don't like doing them that much anymore because you open yourself up to risk. Because here's the thing, a regular covered call, 1 or 2% every week. Great, wonderful. Poor man's covered call, you can get 8 to 10% every single week. But with bigger rewards comes bigger risk. So I was doing a calendar spread, which is a poor man's covered call. And for some strange reason beyond all logic, somebody exercised the short position. And then I had to deliver the shares at a higher price. So I sold them. I forget what the number was. It was like something like 20, and I had to buy them back at 35. I lost $15 per share. Okay? So always know what it is you're doing. And I always tell people, don't ever put real money in. Don't risk real money until you perfect paper trading. All right, so let's take a look at this right here. Okay? 1, 2, 3, 4. 4 counts right there. Okay? That one is a paper trading account. Live account, live account, live account, paper trading account. I still paper trade. Okay? I've been trading for almost 30 years. And yeah, I still paper trade because I come up with trading strategies all the time and I want to try them. I'm not putting real money in. I ain't stupid. Okay? So I paper trade. If it is successful continuously, then I'll put real money into it. JC, that is an index fund. Okay, JC, I'm going to tell you what I tell everybody else. Okay, I have 6 different screens here and 1 down here, which means I have a whole bunch of conversations going at once. So when you say LOL, I know what that means. And you say that is an index fund, I know what that is also. But I have no idea what index fund you're talking about. Your sign says 1% ROI. Can you elaborate on that a bit and what that means to you? Chris, simple, 1% ROI, 1% return on investment. So, Chris, if I have $100,000, 1% of $100,000 is $1,000 a week. 1% ROI on a weekly basis. So if I have $1 million, that's $10,000 a week. If I have 10,000, that's $100 a week. 1% is 1%. Whatever amount you're starting out with, 1% is 1%. Milo, RILY, dude, I don't do RILY because it has monthly options, not weeklies. Okay? Those are months of the year. Those are not weeks. Okay? Yeah, I know who Milo, I know who RILY Group is. I don't do them because the numbers just don't work. I don't do monthlies because they don't work. AGNC, we'll have to look at another day. I'm new to this. What do you do? Chemo, wasabi. I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable investment strategy for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks, and those are companies that nothing but increase their profitability for more than 2 decades. Can you show how to get that screen on Think or Swim? Alexander, how are you doing? What screen are we talking about? Because Think or Swim, when you first log into it, it looks something like, no, that ain't it. No, that ain't it either. Nope, that ain't it either. All right, whatever. whatever. What do we got? Indices. No, I don't do indices. James, thank you. You're welcome. What app are you using to trade? Mr. Dapo. This is called Think or Swim, and it is offered through Charles Schwab. How did you lose the $2,500? It wasn't reversible? No, it wasn't. Sorry, Kevo. I tell you, everybody does it. Nobody wants to admit it, but everyone does it. Everybody hits the wrong button at some point in their life, and you lose because you hit the wrong button. It happens. Just face it. And if you do, you pick up the phone immediately and call your broker. Say, hey, I hit the wrong button. Can you fix it? If you do it immediately, within 10, 20 seconds, okay, even if you get a business, even if you get through and you're on hold, don't hang up, because every single call going into the broker is timestamped. If they take a look at it, you called in, it's timestamped. Great. When did you do the trade? That's timestamped also. If there's 2 or 3 seconds between it, yeah, they'll fix it for you. But if you wait 2, 3, 4, 5 minutes, yeah, no, thank you. To write a covered call, you have to own 100 shares. Absolutely. Done. No way. Done there, done there, done there. Ooh, I'm done with all these questions. Cool beans. Except for YouTube. I'm not doing YouTube. Too many stupid questions on YouTube. Okay, I have to, what do you call that? I have to keep some kind of morality. Is that the right word? I don't know. People ask some of the stupidest questions. Yunez. Bruno, 30 days and 1 year, like the same, going blah, blah, blah. Okay. What is the other YouTube channel running? Okay. Chasing Jack. The 3 YouTube channels. One is over here. It's under a different name. And don't ask me why I'm using that one. Not very many people show up there because it's not advertised. Here is the 10-Minute Trader and Dividend Stock Talk. So one is me standing in front of the screen. And the other one is just the screen itself. Now, the live stream with just the screen allows you to look at the smaller numbers. That's why it is being live streamed. All right, FL Hockey, have a nice night. I'm basically done for the night, so you guys have a great night. What is preventing NAV erosion on ULTY? Okay, Augusta chip. Let me see if I can explain this to you in a manner that you'll understand it. Certain things I deem to be a waste of my time. Okay? ULTY, until they reach a bare minimum of 15 years of consistent profitability, until then, I have no desire to look at them whatsoever. Okay? The things that you focus on that takes your mind off your goal, squirrel. Okay, I have ADD, I admit it. It means I get distracted very easily. So I have to physically, purposely stay on task, stay on target. Because yeah, I get sidetracked easily. And when it comes to my money, I don't want to be sidetracked. I don't want to be tempted to be sidetracked. I seen the numbers at ULTY. It's just not mature enough. That's like, I'm not going to go to my nephew and say, hey, here's the keys to my new Porsche. Go take it for a ride. Yeah, hell no. No. Certain things need to happen. And I like 2 decades of profitability, which means the company, the people at the company doing the same things over and over and over again, they get good at it and they get consistently profitable. Those are the only ones I like. Remember this, 10,140, wait, was it 200? I forget, 10,000, I'll have to double check. Sorry. But there's an awful lot of companies to look at. So why would I look at ULTY if it doesn't fit? Okay? I go to the store, see a nice pair of cowboy boots. Great. Oh, those things look awesome. They don't fit. I'm not going to buy them. Just because it looks good, sounds good, it just doesn't fit. All right? That being said, you guys have a great night. We'll do this again tomorrow. But here's the thing. Tomorrow will be my last broadcast from here in Florida for about a week or two. because I'm going back up to Maine and hang out at the lake and do a lot of nothing. I shouldn't say that because I do. I consistently work while I'm out there. But the last time I was up there, I had to rebuild the carburetor on the old 1940s tractor. That was fun because it gets me out of the house and I get to be in the fresh air in the big field. And guess what? Nobody's there. 20-acre farm up there. It's like nice, quiet, peaceful. All right, anyway, you guys have a great night, and we'll see you again tomorrow night. Tomorrow, we'll see you tomorrow. You're always a day away. Ba-dum-bum-bum. Oh, and now